Good day, students. I'm Sir Giritan. For today's lesson, we're going to talk about a very important topic in the world of finance, which is stocks and bonds. At the end of this video, you're expected to define stocks and bonds, define the key terms related to stocks and bonds, differentiate stocks from bonds, identify the advantages and disadvantages of stocks and bonds, and lastly, recognize the risk involved in each. So buckle up, we're about to explore how money grows. Let's start with stocks. Stocks represent ownership in a company, and the price of a stock changes every day based on supply and demand in the market. There are two types of stocks, common stocks and preferred stocks. Common stocks may receive dividends, while preferred stocks also receive dividends, but they are paid before the dividends of common stockholders. Let's now define the important term related to stocks. Stocks, share in ownership of a company. Dividend, share in the company's profit. Dividend per share, ratio of dividends to the number of shares. Stock market, a place where stocks can be bought or sold. The stock market in the Philippines is governed by the Philippine Stock Exchange or the PSE. Market value, the current price of a stock which it can be sold. Stock yield ratio, ratio of the annual dividend per share and the market value per share, also called current stock yield. Par value, the per share amount as stated in the company certificate. Unlike market value, it is determined by the company and remains stable over time. I prepared 5 examples of situations connected with stocks. Number 1. A certain financial institution declared a 30 million dividend for the common stocks. If there are a total of 700,000 shares of common stock, how much is the dividend per share? Solution: total dividend is equal to 30 million. Total share is equal to 700,000. We need to find the dividend per share. To find the dividend per share, we must divide total dividend and total share. So 30 million divided by 700,000 is equal to 42.86. Therefore, the dividend per share is 42.86 pesos. Let's move on to the second problem. Number 2. A certain corporation declared a 3% dividend on a stock with a par value of 500 pesos. Mrs. Baguio owned 200 shares of stock with a par value of 500 pesos. How much is the dividend received? Solution: dividend percentage is equal to 3%. Par value is equal to 500 pesos. The number of shares is equal to 200. In order to find the dividend, we must multiply the dividend percentage, the par value, and the number of shares. So 0.03 times 500 times 200 is equal to 3,000. Thus, the dividend is equal to 3,000 pesos. In the next question, make sure to listen carefully because this example may be hard for you guys to understand if you won't listen. Number 3. Corporation A, with a current market value of 52 pesos, gave a dividend of 8 pesos per share of its common stock. Corporation B, with a current market value of 95 pesos, gave a dividend of 12 pesos per share. Use the stock yield ratio to measure how much dividends shareholders are getting in relation to the amount invested. Solution: Corporation A, dividend per share is equal to 8 pesos. Market value is equal to 52 pesos. We need to find the stock yield ratio. In order to find the stock yield ratio, we must divide dividend per share and market value. So 8 divided by 52 is equal to 0.1538. Since we are looking for the ratio, simply multiply your answer with 100. So 0.1538 times 100 is equal to 15.38%. Operation B. Dividend per share is equal to 12 pesos. Market value is equal to 95 pesos. We need to find the stock yield ratio. In order to find the stock yield ratio, we must divide the dividend per share and the market value. So 12 divided by 95 is equal to 0.1263. Again, since we are looking for the ratio, divide 0.1263 by 100 is equal to 12.63%. Number 4, a corporation declared a 5 million dividend. If there are 250,000 shares of common stock, find the dividend per share. Solution: dividend per share is equal to 5 million. Number of shares is equal to 250,000. We need to find the dividend per share. In order to find the dividend per share, we must divide total dividend and total shares. So 5 million divided by 250,000 is equal to 20 pesos. The dividend per share is equal to 20 pesos. Number 5. A stock market has a value of 80 pesos and pays a dividend of 6 pesos per share. Find the stock yield ratio. Solution: market value per share is equal to 80 pesos. Dividend per share is equal to 6 pesos. We need to find the stock yield ratio. In order to find the stock yield ratio, we must divide dividend per share and market value per share and multiply it to 100. So 6 divided by 80 times 100 is equal to 7.5%. The stock yield ratio is equal to 7.5%. Now that we've seen how stocks represent ownership, let's now look at bonds, which are all about lending. Bonds are loans made to companies or governments that guarantee repayment of the principal plus interest payments. Unlike stockholders, bondholders are lenders to the institution that may be a government or a private company. Let's look at some important terms related to bonds. Bonds, a loan that pays regular interest and returns your money on a set of maturity date. Coupon, the interest payment you get usually every 6 months. Coupon rate, the interest rate of the bond. Price of a bond, how much you pay to buy a bond. Par value or face value, the amount you receive back on maturity. Quick note: if the price is equal to the face value, then the bond is said to be bought at par. If the price is less than the face value, then the bond is bought at a discount. If the bond is greater than the face value, then the bond is bought at a premium. Term or tenor means the total number of years before the bond matures. Fair price means the present value of all payment the bondholder will receive. I prepared 5 problem-solving exercises for bonds. Make sure to listen carefully because bond problems can be very confusing, but it's fun to learn about something connected to money, right? Number 1. Determine the amount of semi-annual coupon for a bond with a face value of 300,000 that pays 10% payable semi-annually for its coupons. For the given, face value is equal to 300,000 and the coupon rate is equal to 10%. We need to find the amount of the semi-annual coupon. To find the amount of the semi-annual coupon, we need to multiply 300,000 to 0.10, which is equal to 30,000. Since the coupon is paid twice a year, divide the annual coupon by 2. Semi-annual coupon amount is equal to 30,000 divided by 2 is equal to 15,000. Thus, the amount of the semi-annual coupon is 15,000 pesos. Let's proceed to the second question. Number 2. A bond has a face value of 10,000 pesos, matures in 3 years, pays no coupon, which means zero coupon bonds. The market rate is 5% annually, compounded semi-annually. For the given, face value is equal to 10,000, coupon is equal to 0, market rate is equal to 5%, and bond maturity is equal to 3 years. We need to find a fair price, since the problem says compounded semi-annually. Market rate is equal to 5%. Therefore, R is equal to 5% divided by 2, which is equal to 2.5 or 0.025. For the formula, P is equal to face value divided by 1 plus R to the power of n. P is equal to 10,000 divided by 1 plus 0.025 to the power of 6. 1.025 to the power of 6 is 1.1597. P is equal to 10,000 divided by 1.957 is equal to 8,622.9 pesos. The fair price is approximately 8,623 pesos. Number 3. Mr. Anyora bought 51,000 AX bonds at 103. What is his total investment in AX bonds? Given face value is equal to 1,000. Quoted price or QP is equal to 103, meaning 103% of the face value. Number of bonds is equal to 50. We need to find the total investment in bonds. Q is equal to QP divided by 100. So Q is equal to 103% divided by 100 is equal to 1.03. Market price of one bond. 1.03 times 1000 is equal to 1030. Total investment. 1030 times 50 is equal to 51,500. Thus, the amount of total investment is 51,500 pesos. Number 4. A bond has a face value of 200,000 pesos with a coupon rate of 8% payable semi-annually. Find the semi-annual coupon payment. For the given, face value is equal to 200,000 and coupon rate is equal to 8% annually. We need to find the semi-annual coupon. Annual coupon is equal to 200,000 times 0.8, which is equal to 16,000. Semi-annual coupon is equal to 16,000 divided by 2, which is equal to 8,000. The semi-annual coupon is equal to 8,000. Now, I want you to answer the last question about bonds. Please pause the video after the question, then replay it so I can show you the correct solution and answer. Number 5. A zero coupon bond has a face value of 50,000, matures in 4 years, and the market rate is 6% annually, compounded semi-annually. Find the fair price. Given, face value is equal to 50,000. Market rate is equal to 6% annually. So R is equal to 0.03 per semi-annual period. Maturity is equal to 4 years. So N is equal to 8 periods. We need to find the present value or the fair price. For the formula, P is equal to face value divided by 1 plus R to the power of N. P is equal to 10,000 divided by 1 plus 0.025 to the power of 6. 1.025 to the power of 6 is 1.1597. P is equal to 10,000 divided by 1.957 is equal to 8,622.9 pesos. The fair price is approximately 8,623 pesos. Now let's talk about the difference between the two of them. Stocks are ownership shares in a company, while bonds are a kind of loans from investor to a company or government. To make a profit from stocks, you'll need to sell the company shares at a higher price than you paid for them, or receive a regular dividend payment from the company, while bonds generate income through regular interest payments. Bonds typically pay a low rate of return, while returns associated with stocks can be higher. Stocks tend to be riskier investments because they can fluctuate a lot in value over time. Sir, what are the disadvantages and advantages of stocks and bonds? Advantages of stocks: higher potential returns, may provide dividends, voting rights in company decisions, ownership in a company, easy to buy or sell shares. Advantages of bonds: stable and predictable income, lower risk compared to stocks, priority over stockholders in case of liquidation, variety of investment choices available, helps diversify an investment portfolio. Disadvantages of stocks: volatile and risky, requires time, knowledge, and good decision making. Possible tax implication on gains or dividends. Disadvantages of bonds: lower long-term returns compared to stocks. Prices may fall when interest rates rise. Long-term bonds are more vulnerable to price fluctuations. Making money can also have a risk. For stocks, we have market volatility, company bankruptcy risk, and economic downturns. For bonds, we have interest rate risk. Value drops when rates rises. Inflation risk, credit risk. Issuer might default. In conclusion, owning stocks entitles you to a stake in a business that may yield larger profits. but there are also more risks involved. Bonds give you a more steady income as a lender, but they often yield smaller yields. Understanding these financial instruments will help you make smarter decisions in the future, whether you invest, work in business, or simply manage your own money. This lesson was inspired by materials from Script D and Sir Onin, the Gooseman. That's all for today's lesson. Thank you for watching, and I hope you learned something valuable. Again, this is Sir Giritan signing off. See you in the next lesson. That's all for today's lesson. Thank you for watching, and I hope you learned something valuable. Again, this is Sir Giritan signing off. See you in the next lesson.